Good morning, traders. It is Wednesday, July 31st. It's going to be a pretty big day in the market. Obviously, it's one of the most talked about and anticipated Fed rate cut potential news to hit the market in a long time, since I think 2008 or so. Anyway, it's going to be big volatility today. We're going to see the markets kind of sprawling and go in whichever direction the big money is set to go. The big question is, do we get a rate cut? Is it a quarter basis point? Is it half a percent? And that'll be be really dominating probably the next few days, and could potentially change the tone of the entire market looking forward months from now. So let's just take a quick look at the markets. Obviously, things are kind of holding somewhat tight, waiting for the Fed. Gold is having a little pop. It's actually fading back down a little bit this morning, but we'll touch on all this. But let's take a look at the SP 500. SP 500 holding up in this kind of lofty area. On a short-term basis, if we look at yesterday's price action, had a big gap down, came all the way up to more or less fill the gap from the previous lows in the session, came up to fill most of the rest of the gap, but holding its ground. And really, the markets were trading negative yesterday. Now, what was really interesting was what the small caps were doing. If you look at yesterday's price action on the SP 500, we had a big move down, and then it bounced back, and then it kind of just traded in the mid range of the overall kind of open to previous day close yesterday. Now look at what small caps did yesterday. It was really interesting that they gapped lower and they completely rocketed to the upside. If you look at the daily chart, you can see that range, just insane price range going on, and huge strong close. We got to be. It's going to be really interesting to see how things unfold. Last time we saw this type of massive move in the small caps, it was the top in the market. So it's going to be a real toss-up of how things unfold over the next couple of sessions, because this is really big, weird volatility, and things are going to unfold. And when we have this type of volatility ahead of news, it means there's some big money getting positioned. And if the news comes out the wrong way, we're going to see even bigger unwinding, because unwinding positions seems to move the markets a lot more than people moving into positions. Because when you get into positions, you accumulate over time. When you want out, you get out, and you completely crush the market. So we'll see how things unfold over the next couple of sessions. But small caps really the standout day yesterday, having a massive 1% rally, while the rest of the markets were all negative and down on the day. Actually, a while ago, I posted an article showing a mix between utility, or what was it? It was the Russell 2000, Transportation Index, and Industrials. And actually, in 2008, just before the bull market, let me pull it up here, or the bear market. So here is the 2006, 2007, 2008. I recently talked about how the markets are moving very similar to this pattern right here. When you take the small cap stocks, which is the Russell 2000, the industrials, and the transportation, you blend those together. I talked about it right here. We're in the same type of price action. You can see the small cap index actually rallied massive, had a huge move up, and then got completely crushed and triggered, didn't trigger, but and after came the big bear market. And we're starting to see potentially we could have that again, where we're into the same pattern here. Small caps could have some crazy massive pop and move, but then some reverse back down, and could be the start of something really ugly in the equities market. So it's going to be interesting going forward. Now let's move over to the gold. More or less, the US dollar really hanging tight. It's trading flat. Everybody's kind of waiting to see what's going to happen. If we look at gold, it had a strong rally about a week and a half ago, pulled back and chopping around, starting to give some mixed signals. And more or less, it's moved up. Today, it's trading higher around 1444 in pre-market. And we are flirting with this long-term resistance area. You can see these upper wicks. Now, this is the weekly chart. You can see we we closed once somewhat above it, but closed quickly below it the following week. Today could be a very significant day in the market. Gold's moving up, anticipating a rate cut. Obviously, if we get like a 0.5 rate cut, I think we're going to see the markets, probably equities and metals, really take off together as a safe haven type of play, and rate cut will help boost stocks in general. So overall, big move going on, or it's not a big move yet for metals, but it's on the verge of a big move going forward. Taking a look over at crude. Let me go back to the daily chart. Crude oil still got red bars on our trend analysis. It is overbought. It is kind of trading up near resistance. It's actually a very similar pattern that we saw right back over here. Let me just show you on the daily chart. More or less, we've seen a move down before, and then it chopped around and chattered for a bit, and then it kind of had this hook up and then completely collapsed. Commodities seem to do this. Gold does this a lot. And we've got the same type of thing. We've got the move down, we've got the sideways chatter, and now we're getting this hook up. And it's still technically in a downtrend, but we have to manage our positions. We can't just hold on to losing trades. It started to show short covering and momentum. So we ended up closing out yesterday our oil trade, and it's continuing to move higher today. It may end up reversing it and putting in some potential downward move here. This pattern is still a large bear flag that is forming with some type of short covering squeeze, get the majority of the short traders out, and then it'll fall. The market likes to get the shorts out before it falls, and it's having a little bit of extra volatility, making it tough to trade the swing, but I feel as though we are more or less right here, similar to over here, and we could easily see this continue to correct, and potentially we can get into another position later. Looking over at natural gas, having a nice rebound today. Yesterday, gap lower, rallied up. We've been talking about it targeting the $2 range. It still has more potential downside. Lots of volatility, prices falling. It's having a hiccup here. We'll see if the next move brings us down to the 205 $2 mark. But again, we've talked about this about a month and a half ago that August, September, we're looking for it to touch the $2 mark, get close to there, and it could be a very, very good long opportunity when that time comes. Looking over at, let's just touch on the miners. I know here are the miners. Let's just pull up the miners here. They're still in an uptrend. They've had a nice rebound after this little shakeout here, starting to move up. And again, today, no one really knows which way the markets are going to go or what the Fed is going to do exactly. Priced in is a quarter basis point. If there is no rate cut, we're going to see metals take probably a pretty hard haircut, and potentially the equities market as well. If there is a 25 rate cut, I don't think we'll see a whole lot of price action, but if there's a 0.5% rate cut, which I don't think will happen, it would be a major surprise. And then we would see, I think, metals and miners rocket higher going forward. But at this point, they still continue to hold up in this bullish formation. We are long on a triple leverage gold to take advantage of the fresh potential breakout in gold. But really, anytime we have a signal in gold miners or silver or gold itself, I mentioned this during the gold alert, you can really trade any gold sector, gold asset class. They typically move together. Just the gold hadn't popped and broken out yet like silver and the miners, so we wanted to get into something that has built a bigger base that has potential for a larger run. And because we're using the 3x ETF, it gives us that extra power because gold isn't a huge mover. It gives us that extra juice for when it does move. It'll have some pretty good power behind it. Last but not least, let's just pull up the Bitcoin real quick. Take a look at Bitcoin. Bitcoin's still in this very bullish formation, kind of floundering down here, trying to build a base. Much like what we saw over here, you see it pull back, it starts to build some type of a base in a stair-stepping pattern and eventually starts to break and then rally. We're looking for it to build this base and for the momentum to shift to the upside. At this point, it's still down. It might still take a few more weeks, but we might start to get into an opportunity here where it builds a base and we can potentially get in for another rally back up to this previous high for a double top, or potentially go all the way up to the 20,000 mark for an even larger potential double top or beyond. Let's just touch on bonds real quick. Bonds have been holding up. They've been kind of rotating and holding their ground. They are still in a downtrend. If we take a look at the trend analysis chart of bonds and just zoom out a little bit, let's just zoom out a bit here. You can see we've gone from more or less a downtrend, then we had a nice rally in bonds, and now they've pulled back and consolidated, and I feel as though they're going to potentially start another move higher going forward here, but they're still under the key moving averages. There's still the momentum and the technicals are still to the downside. By the end of this week, I think we're going to see a lot of different breakouts or breakdowns in the market happen once the Fed announces what they're going to do and what the big money does with their positions. Anyways, we'll sit tight. We'll see what the Fed does. Expect some pretty big price action volatility today. Don't get too worked up. Usually what happens based on news usually fizzles or fades out half of it the next day or within a couple of days. And intraday price action, we've got to be aware it doesn't always change the trend, even though everyone will be very emotional today. We just got to play the technicals, follow the trend, follow the signals, and in the long run, we should work out just to be fine with our positions and future trades. Talk soon. Bye-bye.